Okay, so welcome. First of all, thank you to FXStreet for having me here to do this webinar. My name is Navin Prithyani. I am the analyst for ForexWatchers.com and the analyst for UrbanForex.com. So today we're going to be discussing a bit on divergence. How many of you guys are here for the first time or first time attending any one of my webinars here on FXStreet or elsewhere? First time on FXStreet? Okay, it's a very great place to learn. Lots of resources here, lots of resources. Okay, first time with me? Okay. So welcome to all the new members that are here. Okay, so let's get started here. Before we begin, okay, since for those of you who are new with me, I'd like to just introduce you guys that I do like to make the webinars a little bit interactive. So I'd like to make sure that whatever is being taught is being learned. So every now and then I will be picking on some people to make sure that they are going with the flow. If at any moment you feel you have to ask me any questions, please do so. We don't leave anyone behind and we make sure everyone's at the same speed. So the topic of today is divergence. Okay. Now divergence is taught in a particular way. Everything I do is always re-engineered and recreated in a certain way. Okay. You know, there's regular divergence, there's hidden divergence. Okay. Divergence basically comes out of a difference between your price and your indicator. Okay. So let me show you something like that. Okay, there's two types of divergences. Again, there is the regular divergence and then there's hidden divergence. I'm going to show you the way I do it, okay? And for the sake of all the new people who do not know what divergence is, we're not going to use the word divergence anymore for the rest of the evening. For the next 45 minutes, we're going to use the word opposite, okay? So everyone understands what we're saying and how we're going about this. Okay, I'll explain to you why we're using the word opposite. Okay, let's pick a chart. What currency pairs do you guys like? Any particular currency pair you guys enjoy using? Okay, Aussie dollar. Okay, let's take a look at Aussie dollar. My personal preference to find these opposites is stochastics or stochastics. Okay, for you to do that, if you're using your MetaTrader, you can simply click Insert, Indicators, go down to Oscillators, and you'll find it in that list. I usually just select it and I keep the settings the standard. If you don't know what the standard settings are, click Reset. It'll be 533 and click OK. I simply use this to understand, is the market doing something opposite than what the indicator is telling me to do? Okay. Now, simple scenarios. Which direction is the market going here? Okay, so you guys are understanding the flow of the market, right? It's going down or it's going up. Which direction is your indicator going here? Up. So when it comes to times like this, we want to spot areas where your indicators and your price are not lined up. Now, for instance, take a look at this area. Okay, we have a high area making a lower high. On our indicator, we have a high practically making slightly lower high right there. Is it doing the same thing? Okay, it's practically the same thing here, right? It's going slightly down, this is going slightly down. Let's take a look at the next one. You have this high going down to your lower high. What about your indicator? Things have changed, right? Price is going down while your indicator is not giving you that same information. This is when your opposite occurs. Okay? So the way I do it is in an uptrend, okay, if the market is recently going upwards, like this area here, let's assume you didn't see the future, nobody can. As the market is going upwards and you see it starting to come back down, you want to connect your highs. In an uptrend, connect your highs. In a downward movement, connect your lows. Okay? These opposites basically indicate that the markets are getting ready for a reverse. Okay, so before we continue, okay, for all of you people who are new to divergence or opposites, okay, this is going to be a fun learning experience. For those of you who are advanced, how many of you guys actually know divergence / opposite from before? Okay. Now the next question is, how many of you guys actually use them? And what is your feedback about it? Do you like them? Do you not like them? Okay. Rare, kind of depends. Okay. I'm gonna show you guys a particular technique of what is actually going on in the market, and to a point where you'll actually probably start liking them again and probably implement them into your current trading strategies. Mike, I agree with you. Even I don't like indicators. You can see that I'm not using the stochastics the way a normal person uses it. I'm using it to compare it with price. So even, trust me, I'm with you right there 100%. I do not like indicators. So let's take a look at this entire scenario for a different example. Okay, that was a high going lower, and let's look for a low going higher. Okay. Let's see here. Let's see if I can spot one for you. Well, we have a similar scenario yet once again. If you want to connect your highs, see how the markets are going lower, the indicator is going higher. Okay, and the market was in an uptrend. This is why we're connecting our highs. Okay. Now, what is the best way to figure out where the opposite actually occurs? Okay. If this is the area you're going to plot your high from, you look at the same area on your indicator. So if this is the area you're going to plot the circle from, your high from, put a horizontal line. Has this ever been breached? Okay. It's never been breached. Do the same thing with your indicator. Has this ever been breached? Okay. Once you see that breach happen, that's when you get to see like, oh, an opposite is in play. Okay. An opposite is in play, which means like the market's probably going to get ready to turn around any moment. So it keeps you on alert. Okay. Let's take a look at some more examples. This is a downtrend. You see how the markets are coming down here? Downtrend market, pretty much flat there. Over here, it's a downward motion. It's not saying the same thing. Okay, it's not opposite either, but that's why it's not so strong. But it's not saying the same thing. So these things are really, really powerful to look at, and when it comes terms to finding out the flow of the market to see where are we going, are we getting ready for a reverse, and if you mix this up with your original market understanding of where the markets are headed, they're very, very powerful, extremely powerful. Okay, so now for the sake of an example, let me show you another area. Okay. All right, would you guys consider this as an opposite? Okay, yes. So if this is the high you're connecting from, and this is the high you're connecting from, draw a horizontal line. Did your indicator ever get breached at this area anywhere? No. But what about your price? Was your price ever breached? You're like, yeah, the price breached here. And that's when you're started going on alert that, oh, looks like the opposite is in play. Market should be reversing any moment. Okay? All right. Now, that's just the fundamentals of divergence, hidden divergence, or these opposites that we're discussing today. And I want to get into it a little bit on the intermediate side. You can pick up more of this information probably somewhere on FXStreet or online anywhere. But I want to get into a little bit on the intermediate level of people who are simply trading this. Now, this divergence or hidden divergence, it's just like any other indicator. It's highly, highly used. When it's highly used, it means 95% of the market uses it. Okay? If 95% of the market uses it, it won't work. Here's the thing. What most people fail to understand is if I'm going long and 95% of the people are going long, what are the operators doing or the larger players doing? Are they moving the markets down? Okay, are they simply just turning around? Okay, if that's the case, why is it that if you're thinking that I should go long and instead you go short, you still lose? Because the objective is not to do opposite what everybody is doing. The objective is keep them still in the game. You want to do a sudden burst of a short and then proceed long. So those who went long here get stopped out, and once the market resumes in their original direction, the person simply just assumes, oh, right, I just entered at the wrong area, but whatever I did was correct. That's the mentality that comes in, which makes the person keep going. Okay? So having this whole aspect of learning the psychological aspect of the market, okay, we want to use this in these opposites to find out what is actually going on. You know, now let's take a look here. Most people look at these opposites, they're like, whoa, this is really cool, because when we're back testing, it looks perfect, right? It's every single time I draw these, they look like they're perfectly reversed. Here's the thing. I'm going to show you how it really looks when it comes to live markets. I'm going to show you that. Give me a currency pair. Which currency pairs do you guys like? Any other currency pair? John, AY, is that the Aussie yen? Okay, we'll look at Aussie yen and then we'll look at Euro USD from MRC and Arnold. Okay, let's take a look. US dollar Mexican. I don't even know if I have that on my on my screen. Okay, let's take a look at Aussie yen real quick. Okay, let's go to the hourly or 4 hours, for example, and let's find this opposite. Okay. Would you say this is an opposite right here? No. Okay, very good, very good. What about this right here? Okay. Now you can clearly see there's nothing interrupting it in between. You have this low connecting this low. With your high, you don't have candles going through it. It's simply clean. You can see that it's one shot and nothing interrupting it. So same thing's happening with your indicator, but it's telling you the opposite scenario. Okay? Do the same thing. You draw your horizontal line. Anything crushing it? No. Draw your horizontal line on your indicator. Now, if you actually see in real life, most people are going long here. This is the area where everybody notices that divergence and says, I want to go long. Okay? I want to go long because I see an opposite thing coming into motion and I don't want to be selling anymore. I want to go long. What happens is these people who are going long must first get out of the way. Okay? Sharp move down, all the stops out, and then it starts going long. Which means when you look at this later, you're like, oh, this opposite actually did work. It's just I entered at the wrong area. You see how when you look back and you're like, oh, of course. You always end up blaming yourself. It's like, oh, it was me. You know? So when you look at this, what is this area here? Why are people going long here? For one, you see this divergence happening. You see that the buyers are building up. You know, that's for one. Second thing, let's go down to the 1 hour charts. Okay, 15th of April, 1 hour charts. Where is my 15th of April? Okay, these are the same areas where your indicator says oversold. Many, many trading strategies, automatic trading systems are getting ready for a long at this area. They have to be killed. They have to get out of the way for these bigger players. What it means by get out of the way, it doesn't mean simply take the market in the opposite direction. It means take it in the opposite direction temporarily, and then take it north. Because even once you take the opposite direction temporarily, breakout traders start selling here, right? You know, we've all heard about breakout traders. They live off of this stuff. Oh, look, the market's going short. I need to sell, 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 sell. Well, okay, sell. How long are you going to be in for? It's only a matter of time before the breakout traders are also crushed. Okay, so this whole pattern, if you understand the psychological aspects of it, and you use your price action techniques, you know, such as opposites or any other thing, they can actually be quite powerful, you know. Okay, so let's take a look at another example. You guys want to just see Euro USD? Let's go back to the 4 hours. Let's scroll to Euro USD. Any particular month that you guys like, or you guys want to check out the current month? What do you guys want to do? Give me somebody's birthday. Let's check out if there was any trades on someone's birthday month. So what should we have done? Oh, sorry, I just saw the questions. At moments when you see divergences immediately happen on a live market, wait. Don't just jump in immediately. Wait for, I guess the right word is, for the killing to happen, or for the stops to be taken out. Why did they call it hidden divergence? I don't know. It's like, why did they call this stochastics? Why did they call it MACD? It's just a word. And honestly, for me, whenever I look at all these things, they're all the same thing repackaged. Okay. All right, why not wait for price action confirmation after the divergence? You'll see many times you'll have price action also confirming, even candlestick formations confirming, and it will still go down or against you for a little bit before it continues well. Okay, remember, if it makes if it looks like, okay, there's a divergence, there is a pivot, support resistance there, and there is a price action information. Remember, it's not just you looking at that. It's everybody's looking at that, because that's how we're trained. Okay, I'm looking at it like that also. That's how we're trained to look at it. So just now imagine if you're the larger player and you know this information, what do? You have to find a way to take these people out, right? So always think of it in terms like that. Okay, don't think of it that this is what I've learned, this is going to work. Chances are, the way that you've learned it, everybody's learned it. Okay? So in a nutshell, whatever's popular does not work. Okay? It looks like it works because when you backtest it, it looks nice. It looks pretty. Okay? But in a live market, the reality is totally different. All right. Now we are on Euro USD. Somebody said May 27th. Let's take a look at the month of May. All right, so this is the month of May right here. Okay, let's see here. All right, everyone, is this an opposite right here? No, very good. Okay, what about this? The markets when it was going in an uptrend. Are these opposites? Very good. How about this? Are these opposites? Okay, we got mixed, right? And we have question marks. Okay, one rule of thumb. When in doubt, for anything when it comes to related to Forex, when in doubt, leave it alone. Okay? Don't mess with it. It's a 24-hour market with tons of currency pairs to choose from. Don't chase it. There's always a next one. So when in doubt, leave it alone. Okay? Moving forward. You see an opportunity here for this, sorry, this is correct, going downwards. Because once the market went down, this is the area it started going up. Look at the very last trend. Okay? Do you see anything there? Any opposites? No. Okay, the very last trend right here. See how the markets are coming downwards? So we're going to connect our lows now. Downtrend, connect your lows. Now do we have anything? Yes. Put your horizontal lines. Okay? When did the opposite actually occur? In this area. This is the area where it first became visible on a live market. When people are actually trading this live, this is the area where it first came to your eyes to see, oh, looks like something is happening here. Okay? I must enter when the yellow horizontal line of the indicator is broken. No, you must never enter there. Okay? As per my opinion, never enter there. Okay? Now this area, okay, also, if you notice, is going to be an oversold area on a lower time frame. Take a look. Oversold area here. It's too low. The market's got to go long. Markets are going sideways. It's at the bottom of the range. This is the top of the range. You know, people look at this as, oh, it's a sideways market. We're at the bottom of it. Buy. Okay? And then obviously the killing happens, you know, it goes down. So you never know if it keeps falling or turning. No, here's the thing. George, here's the thing. You need to understand the structure of the market. The market moves in legs. Okay? The market never simply just moves in either a straight line down or a straight line up. Okay? Now, I don't know if you guys have seen, George, if you've seen my previous webinar here where we discussed circles, how you identify where the markets are headed based on your circles. Okay? When you draw your circles at the absolute most extreme points, you get an idea of which direction the markets are headed. This, you can obviously see that the markets are going downwards. Don't use trend lines. I've taught this last time also. Do not use trend lines because trend lines can be misleading. If you draw your trend line, this is where you're going to expect the markets are going long. That is not where the markets are going long. This area must be taken out. So draw your circles to get an understanding of which way the markets are flowing. Do the same with your lows. When you draw your lows, okay, the moment you start seeing a higher low, you're like, okay, now we're getting a shift in direction possibly coming in. Are we going to break this high also? Let's see. Yes, we did. Okay, once this happens, now you're challenging your next and next levels to see, can we maintain and keep going higher? That's how you go into an uptrend. So if you find all these areas together with your opposites, you get an understanding of which direction the markets are heading. The best opportunities are when the markets just switch sides. Those are the best opportunities. The highest risk to rewards come from there. Okay. All right. Let's take a look at another example. Those of you who have not been on the chat, get on the chat room. Let me know which currency pair you want to see. Don't be shy. We'll take a look at them. We'll discuss them thoroughly. And we just looked at Aussie dollar, Alim. Gold. Let's take a look at gold. Do I have gold? Yes, I do. Okay. We'll go down from the 4 hours. Let's take a look at what we have for gold. All right, gold. When the markets were coming upwards here, see, we're going in an uptrend. We're connecting our highs. Same thing here. Do we have an opposite? Will these rules fit to RSI too? Absolutely, absolutely. Does it work best on 4 hour? It works on any time frame. Any time frame. Always remember one thing though. If you're on the 4-hour chart, right, and you sell here, expect a 4-hour chart kind of return. If you're on the 15-minute chart and you sell here, expect a 15-minute kind of return. Outside of that range, you are gambling. So what does that mean? What does that mean? If you're selling on the 15-minute chart and you're selling around here somewhere, don't expect this big move. This is a 4-hour big move or a daily chart big move. Don't expect to hit this home run with the 15-minute analysis from the 15-minute charts. Chances are you're going to get stopped out before you even get on the move. Okay? So understand where you're making your analysis and project accordingly. Okay, so here we go. When we take a look at this one that we're looking at right now, draw your horizontal lines and see when did we have the cross. So let's do it this way. Okay, indicator, does it ever cross as of right now? No. We're going to move forward. Has the indicator crossed now? Sorry, right there. Has the indicator crossed now? Yes. So you can possibly assume that this is your high, that most people are looking at this area and saying, I'm going to sell from here because this looks like it's gone high enough. Okay, let's go further. Aha, it starts to turn here. They're like, yes, I want to sell there. Okay? The killing happens. Goes strongly north and it kills them. Because even when this part, when they think that it starts to turn, they're like, this is the area, this is it, it's now or never. If I don't do this, I don't get my Ferrari. Okay? People get excited. They pull the trigger. They see this cross happen and everything. They're like, I need to get in now. Well, this is what people don't realize is the market needs to make a further move. Kills these people, goes a little bit higher. For those of you who trade supply and demand or support and resistance, this area gives you a heads up and saying, now. Now is the time. This will work, but just not when you are first expecting it. Because this is the area for the 95% to enter and get murdered. Murdered is a harsh word. Tricked. Let's use that word. Okay. So what is this area here? What is this area? Why are people selling here? Well, first of all, they see this divergence on the 4-hour. What do they see on the 1-hour? It's what? It's this overselling all the time, right? Look at all these times it's oversold. You have got to assume every trading system that has indicators involved, every EA, you cannot program EA based on price action. You can't make an EA think about what you see. It will have to calculate some numbers, and those numbers come from either the ticks moving or the stochastics. So to some extent, everything is selling at this point. Okay? And once everything is selling, even people who are using support and resistance will assume this is the area for support and resistance to sell. Well, the actuality is it's the next level up that's more important than this level. Okay? Does that make sense, guys? Is everyone with me so far? Anyone confused so far? Okay, so what should be the best entry, Arnold? Okay, so the best entry actually is once you see this happen and you see the market start to turn. Okay, on the 4-hour, you're expecting, this is your first area that people say sell. And you see this turn starting to happen. When the turn starts to happen, even those who had a little bit of doubt start to sell. Okay, you need to do something to initiate greed, right? So as the turn starts to happen, the selling begins. As the selling begins, all the stops are placed above your recent high. That's what we're trained to do. Place your stops above the recent high. It's the safest area. Okay. Market moves north in a singular motion, or 2 candles or a single candle. Takes everybody out. Hovers a little bit, and then it'll move. Okay. This one took its time, but your highest point ended up after the killing area. So these are your areas that you want to probably be more interested in getting in from. Okay, so when you see the initial area, beware. It's not the initial area. Okay, remember when we do it this way, when we backtest it, this is how we're backtesting it. We're looking at it like this. We're like, this worked. You know, this is beautiful. It worked. When we draw our lines, we're like, absolutely, this is brilliant. Okay, our stops taken out. Are stops taken out as too small? No, not necessarily. You know, you will see brokers stop hunt a little bit, but you know, they don't have. They're legally not allowed to stop hunt if your stop is like 50 pips away from the current market prices. So the objective is not to keep a 50 pip stop. For example, if this is your primary area to sell and your stop is at 30 pips, and the market moves north to kill you, and then it starts to go south afterwards. If you were to enter somewhere around here, even if the market goes like this afterwards, okay, your 30 pip stop from here at the next educated level will keep you alive. This one will not, because it's not the number of your stop, it's this. It's where you entered that made the difference. Okay? A broker cannot take you all the way up to spike you out. You can actually claim, you know, and they will get a slap on the wrist by the NFA or something. Of course, they're not going to close down, but they can't do that. They can't move that much. And they can do a little bit here and there with the spread and then, you know, take you up. But that's about it. That's about it. There are no illegal activities with these larger brokers. They have to keep clean as much as possible. Okay, so it's the matter of, again, coming back, it's the matter of not the number of your stop, but where you enter and then keep your stops from. Okay, does that make sense, Boyke? Okay. Can you have a look at Euro Yen when you are through? Yes, absolutely. Let's take a look at Euro Yen. Euro Yen. Let's take a look. Okay, Euro Yen. I'm going to pick somebody from the room. Let's see, with all these people here. Let's see. I'm on the 4-hour charts. Okay, Mr. Alim, is this an opposite? Alim Javed. Okay, and this particular one, this would not be considered an opposite because you see the markets are actually going down. Even on your indicators, they're going down. Okay, so this would not be considered an opposite. Let's see, Carlos H. Is this an opposite? Okay, no, very good, very good. Okay, and coming down to Chuck B. How would you look at it for something like this? Would you consider this an opposite? Okay, Boyke, I'll get to your question just a moment. Yes. Okay. Now, notice why we used the upper areas here. Okay, because it's the very recent trend that we look at. It was upward, so we connect the tops. Okay, so now that we see here, and we see if we draw our horizontal line, it's like, where did we first see the crossing? It's here. Okay, on our price we never crossed, but on our indicator we did. What is this area here? It's this candle. It's this candle. If you actually see on a smaller time frame, this is an area you'll start to see a curve. You'll start to see a curve start to happen here. Okay, it's here where you get your first indication, but the market actually goes higher before it dives. Okay, so it's very important to look at these areas and to compare and contrast of what's going on. Okay, you had a question on. I mean, if stop is too near recent high, disregarding entry, that should not be a problem, because when the market actually has to go, it will go. Like I said, if you are familiar with support and resistance, or supply and demand, and of course I teach support and resistance a little bit differently, but if you're looking at supply and demand, because that one I think most of you guys should know. If you're looking at supply and demand for areas like this, you automatically start to assume that this is the area for selling. Now, if as this comes along, you see a divergence start to form, okay, or it's formed already, your opposite. The killing happens, it reaches your next supply and demand area after the killing. That's when you're like, I can enter, you can even keep your stops close, and you'll still be okay. Okay, I've seen many people trade with even 10 pip stops and they're still fine, of course, on Euro USD only. Okay, so if if price is down and indicator is up, what should price do next? Reverse. Whatever price is doing, it should reverse. Okay, so in this particular case that we looked at, which one was it? So here, once we have an opposite, price changes direction. Opposite, price that was going long starts going short. Price changes direction. Okay, let's take a look at a couple more examples. Okay, anyone here confused? Everyone with me still so far? Okay, and everyone's going to try this at least once next week or this coming week in their trading and see how it actually can really make a difference. Okay, try it out. Try it out. You'll be surprised how powerful this can be. Okay, are you saying that price adjusts to the indicator? No, Sharon. It's always the indicator that adjusts to the price. But when you see these opposites, it just gives you a heads up that price is getting ready to turn. Okay, is it okay to take profit near the next pivot or before the price? Oh wait, sorry. When is it okay to take profit? Near the next pivot? Regarding take profits, you want to look at support resistance areas. You want to look at supply and demand areas. You need to understand the flow of the market. Now, for example, which direction is this? Okay, which direction is this market going? It's going up clearly, right? Now, how much of a retracement do you think this is from this circle to the next circle? Let me draw a line. 76%, 68%, 70%, in that range, right? Now, as the market continues north, this is your circle on top. How much higher did it make this circle? Okay, it's gone a little bit higher, and as it starts to pull down, understand this level of how much strength do the buyers have when they're doing all this. So if you're having a pull down, this area, is it like is this too strong for the buyers to take over from here, or do they need to go further? Take a look at Aussie dollar as an example. Okay. Now, Aussie dollar has been going absolutely berserk lately on the 4-hour charts. Okay, when you take a look at this, from here to here, what kind of retracement is that? Okay, look at the same thing to the next level. What kind of retracement is that now? Look at the next level. What kind of retracement is that? It tells you that if you're in a trade to sell, should you sell closer or higher to this circle? I'm sorry. Closer or further away? Are you going to sell here, or is it logical to sell here? Okay, so you need to understand and gauge the strength to understand which area it's going to be from, because your areas, you'll always spot your areas properly from support and resistance or supply and demand, and all these areas, you'll get these areas just fine. It's just understanding the flow of the market. You know, are you on top of it, or is it on top of you? Okay. So when we looked at Euro Yen, we're looking at this, we're like, well, I don't want to be buying here. This is leg 1 down, first of all. You never buy leg 1 down. Or you never buy on leg 1. See, it retraced in one leg. And you're like, okay, I see that the buyers have strength here, but compared to what? Look how low the sellers brought it down. And look how much higher it went from the previous high. So you're not going to obviously buy here, but you know that there's more strength now. It's the next level that comes in. You're like, okay. Okay, if you're expecting this area as a supply and demand area, something even lower, that might be just too low, because you're not understanding the strength of this area here. Okay, so you'll be able to pick your areas, but you won't be able to pick out when to enter. The areas are easy to spot. Remember, most people trade based on location. Everyone is trading based on location. They don't see what the market's doing and trade accordingly. They trade based on, well, this is a proper area. This is a psychological number. This is where the stochastics are going long. They trade based on location. How does indicator know to reverse before price, as usually follows? Every now and then you'll have it opposite. Sometimes price will lead the way, and the indicator only gets confused when the price actually makes a sudden move. Okay, you see how when the markets went long here strongly, the indicator followed, but when it does a sudden drop, like this one, take a look at your indicator. It takes a sweet time. It's just like, hey, let me catch up. Okay, but if it does it in an X amount of candles, of course it will follow easily. It looks like it's following. Okay. The numbers of stochastics 533 combine only for 4 hours. You can use it on any time frame, Gerard Martinez. All right, guys, we're going to have to do one thing here. It is time. We're going to have to close the conference room. I just want to let you guys know that I did hear back from FXStreet, and we were ranked in the top 10 most read analysis for FXStreet. We used to charge for this service extremely high, for approximately $350 a month. We have now made it for free. This is my forecasting service, and it's available on the App Store for you guys to pick up. So this is now available for free, so enjoy. Thank you again, FXStreet, for having me, and I look forward to seeing you guys in the next webinar. Take care. Have a good night, everyone.